It's my pleasure to welcome you to this important webinar on leveraging the inclusive innovation to drive migrant remittances and financial services in Bangladesh. I would like now to introduce our welcome address speaker, Her Excellency Nathalie Chouard, Ambassador of Switzerland to Bangladesh.
Thank you very much. Thank you very much, and a good afternoon to all of you. And I hope you can see me now. Distinguished Secretary and panelists, ladies and gentlemen, dear colleagues, I am really happy to join all of you on this webinar, leveraging the inclusive innovation framework to drive migrant remittances and financial services in Bangladesh. Migration is a reality across the globe and also in Bangladesh and for Bangladesh. There are over 12 million Bangladeshi migrants in the Middle East, the Gulf state, and in the Southeast Asia who are committed to work and support their families. They have been steadfast in sending part of their income, the remittances, back home. Often they do so even though their income is very limited. In the last 5 years altogether, these migrants have sent back to Bangladesh some 85 billion. During the pandemic, Bangladesh received 20 billion remittances. This number makes it clear. Millions of families rely on this money transfer to buy food, to send children to school, to get healthcare, and if they can, to make savings for dealing with another crisis. Any variation in the remittance inflow caused by unexpected shocks may seriously affect the well-being of the migrants and their families, even forcing them to a severe social and economic downturn. That said, remittances are only the starting point. They are a gateway to wider financial inclusion and can be linked to other financial services and products. Migrants and their families should be able to save money, access credit, or get health insurance. Switzerland is fully aware of the importance of remittances and larger financial inclusion for the sustainable development of a country. Remittances are not only important on an individual or household level. For Bangladesh as a country, remittances are crucial since formal remittances sent home every year represent about 5.1% of the GDP, and their potential remains untapped. This is why we have been cooperating since 2019 with the United Nations Capital Development Fund on the remittance program. Switzerland supports UNCDF to bring digital financial services to unserved and underserved migrants. We are aware that working through this pathway can be challenging. For example, when it comes to the financial inclusion of migrant women. Indeed, women face particular hurdles such as restrictive gender norms and low financial literacy. Overall, migrants, particularly women migrants, are not yet fully recognized by the private sector as a customer group. Therefore, I am particularly glad that UNCDF has been working on the country assessment on inclusive innovation. The Inclusive Innovation Assessment for Bangladesh proposes recommendations for key stakeholders to make remittance product innovative and inclusive. It looks at the product level, at the institutional level, and at the ecosystem. Digital services have to be designed with a focus on the customers. For instance, 33% of the migrant population from Bangladesh are women, and on the receiving side, they make up 65% of remittance recipients, whereas their current access to formal savings and borrowing is only 6% and 16% respectively. Many female customers are unaware of the range of services and features available in products, as marketing efforts by providers are often only focused on existing mobile financial service customers. Incorporating a strong gender lens in the design of digital service is central, so to ensure that women migrants and their families have access to safe, transparent, and affordable remittance services. Other opportunities for immersing inclusive innovation for remittances are also there in building a more robust enabling environment. Given that banks and mobile financial service providers are the only institution licensed to process remittances in Bangladesh, There is an opportunity to look at whether extending such licenses to other institutions has a positive impact on financial inclusion. On the sending side, providing digital alternatives on reducing reliance on time-consuming bank transfer could unlock significant benefit for migrants. The main actors in this are the local stakeholders. It is the Bangladeshi government, particularly the Bangladesh Bank, which looks at its regulation and analyzes what bottlenecks need to be adjusted. Another key actor is the private sector. For instance, the BRAC Bank, that works on offering migrant-centric and gender-smart digital financial products. We are therefore delighted to have today key partners around this virtual table, representing a diverse group with the government, regulators, financial institutions, UN, CSOs, and social enterprises all represented. In closing, I would like to thank UNCDF, not only for the webinar today, but also for the excellent cooperation throughout the years. The presentation today marks the result of an extensive research and consultation process that UNCDF and its partner have been undertaking in consultation and in order to get a comprehensive understanding of the commercial viability and inclusivity of remittance-related innovations. I am confident that this session will give us all a glimpse into the approaches we need to foster in order to foster innovation. This seems to us even more important, I would say even central, at a time when our world faces unprecedented challenges and that we need to innovate more than ever for everyone to navigate these uncertainties and not be left behind. Thank you very, very much.
Thank you very much, Ambassador. May I now invite Dr. Ahmed Salehin, Secretary at the Ministry of Expatriates, Welfare and Overseas Employment. If you may just unmute yourself, please.
Okay. Sorry. Thank you again. Good afternoon from Bangladesh. Her Excellency Nathalie Chouard, Ambassador of Switzerland to Bangladesh, distinguished panelists, and all other distinguished participants. Thank you for giving me the opportunity of delivering the inaugural speech in the webinar on leveraging inclusive innovation to drive migrant remittances and financial services in Bangladesh. I would like to take this opportunity to thank United Nations Capital Development Fund, UNCDF, for organizing this timely and a much needed webinar. Bangladesh is one of the few countries which immensely benefit from migrants' remittance, and we can be conveniently and comfortably say that it is one of the lifelines of the country's economy. We know that migrants are one of the most important socio-economic segments of Bangladesh. More than 10% of Bangladesh population are migrants, and about 1/3 of them are women. Remittances sent by these workers are crucial to the socio-economic development of recipient countries such as Bangladesh. And we can give you some statistics that remittances inflows from migrants represent 5.1% of the country's GDP. I am giving you the statistics of fiscal year 2021. This underscores the importance of remittance inflows on the country's economy. The growth of remittance inflows has outpaced the growth of immigration. As a large remittance receiving country, Bangladesh registered a significant increase in the inflow of remittances during COVID-19 pandemic. While remittances influence had been steadily increasing in Bangladesh, that they grew by almost 70% in 2020 at the start of the pandemic, countering a global trend where remittance to low and middle income countries fell by 1.6% during the same period. Bangladesh attaches its importance to remittances, and hence it has started providing a special incentive to the remitters. It was introduced in the fiscal year 2018. So this 2% cash incentive for remittance during the time of COVID in particular was pivotal in supporting the remittance ecosystem. There was some bad prediction, especially defying the 22% decline predicted at the beginning of the pandemic. Remittance inflow for 2021 was a staggering 46% above the predicted decline. And as compared to the previous year, that is the year of 1920, we received 36% more remittances during the fiscal year 2021, which was a record high, and it was defying all the ominous prediction. This increase was due to a combination of factors. In fact, it has become a puzzle to many researchers as well as experts, that how could you explain this interesting or very happy rise. So there are a lot of reasons could be attributed. For example, cancelling the pilgrimage to Mecca, Hajj pilgrimage, and floods in July significantly boosted by the government incentives targeted at using formal channels and disruption of informal channels caused by movement restrictions. Personally, I strongly feel that one of the most important reasons which paved the way for the increased amount of remittance is the increased use of legal channel. That was perhaps the main reason. And that is how, because human mobility was utterly restricted during the high time of COVID. And people, I would like to use a particular word, that the remitters were compelled to use the legal channel. So that is one of the most important reasons, coupled with some other factors. However, not all remittances user groups have adopted formal remittance services due to customer empowerment, constraints linked to cost, digital literacy, and trust. We have the opportunity of visiting some few countries during the last 1 month, and as the government initiative to look into the causes and way forward about how we can increase the remittance inflow through the legal channel. And we have come to know that there are a number of different constraints. And one is, I think, if I want to generically identify it, it is the convenience of sending remittances through illegal channel, as the relative inconvenience of sending it through the legal channel. That is perhaps the most important reason. Especially, it has something to do with the status of migrant workers as well. When a migrant worker's status is not well documented and in some way or other they are irregular, then they tend to send their remittances through illegal channels, or they are compelled to send them through the illegal channels. So as far as the dependence of Bangladesh on foreign remittance, on workers' remittance is concerned, making sure that remittances or the lion's share of remittance is sent through the legal channel is very important. So when they send remittances through illegal channel, this system also restricts migrants' access to other financial services like savings, credit, insurance, etc., which ultimately could contribute to their economic resilience. Digital remittances and financial services that can further accelerate the financial inclusion of the migrants have been a priority of the government of Bangladesh. As the ministry in which I work, the Ministry of Expatriate Welfare and Overseas Employment, we are providing training to the potential migrant workers about financial literacy. How can they can make the best use of their hard-earned remittances. And so now, from now onwards, it has been made mandatory for each outgoing worker to have a bank account in his name in the country, so that they are compelled or inspired to send their money through the legal channel. Investment in digital infrastructure have been a priority for the government as well, and it has been done since the launch of Digital Bangladesh back in 2010, which has driven the uptake of digital payments further accelerated by the COVID-19 pandemic. 1 in 5 transactions is digital in Bangladesh, and the monthly mobile financial services transactions doubled between 2016 and 2022. So, distinguished participants, I would like to draw the attention of the participants to the opportunities in migrant financial services that may further boost the market. Number 1, Bangladeshi migrant workers tend to remit higher amounts than their male partners. There has been different studies. This is from different studies that migrant workers, female migrant workers tend to remit more than their male counterparts. In 2009, women were more likely to migrate to be with their families, but data from 2019 indicate that migration now provides them with an opportunity to participate economically. However, women still comprise a small portion of the remittance centers for Bangladesh. The provision of remittance-linked service is rising in Bangladesh, particularly with the products such as savings, credit, insurance, and insurance. The provision of remittance-linked services is rising in Bangladesh, particularly with products such as savings, credit, and insurance may be of particular attention. Some leading banks have begun offering deposit products and features with higher than usual interest rate, such as fixed deposit or equated monthly installment products with special interest rate. So all these can be done if we work together, and we have been working to make sure that the life of the migrant workers, whether this is in the destination country or whether it is in the country of origin when they come back, is socially protected. And in order to do this, in the meantime, the government of Bangladesh has initiated a special insurance scheme. This scheme is meant for, it is a life insurance scheme, and we are trying to expand the scope of this insurance, which will cover a part of failed migration. That is to say that in case a worker returns from the destination country within a period of, say, 3 months or 4 months, they will be provided with some compensation, and this is against a nominal amount of premium for the insurance. We are working about this with the national insurance provider, Jiban Bima Corporation. We want to, at the same time, extend the scope of benefits, keeping the premium at a very reasonable cost. So this is what we think that if we want to ensure safe, orderly, regular, and responsible migration, we should not be only mindful about sending workers, but at the same time, how we can ensure the all-out comprehensive welfare of the workers, whether it is in the country of destination or it is when they are back home. Especially, we want to reiterate our commitment that we want to provide reintegration service to our workers. And this would be, again, something to do with their financial literacy, with how they can remain productive even after the return from their destination countries. So this is what I want to share with my fellow participants, so that some interesting suggestions can come up, since this is, we are going to have a country presentation by Mr. Premashish Mukherjee just after this short statement. And I sincerely hope that the country assessment study by UNCDF on migrant financial services and this discussion will inspire participants and stakeholders present to focus on migrant-centric, gender-responsive viable financial services. I would like to conclude by saying this, that migration has to be developed as a tool for development. So if we want to do this, and if we are really committed to ensuring safe, orderly, regular, and responsible migration, we will have to have some shared responsibility. And this is, there is no denying the fact that migration involves stakeholders from all the sectors. And the government of Bangladesh is trying to solve the migration issues and address the migration issues from the whole of society as well as the whole of a government approach. Because we understand that if migration has to be evolved, has to be developed as a tool for development, it has to be safe, order, regular, and responsible. Particularly, we must be quite sensitive to the gender issues, so that even the women folk who constitute the significant portion of the whole population remain vibrant in the Bangladesh economy by being empowered. So with these few words, I would like to conclude, and I'm looking forward to the country assessment and the thoughtful ideas that we are going to have from our panelists. Thank you very much.
Thank you very much, Dr. Salihin, for your insightful background address. Before we dive into our main topic today, we would like to give you a light description about the involvement of UNCDF for the cause of migrants and the methodology behind this concept of inclusive innovation. The United Nations Capital Development Fund is an investment agency within the UN system with a focus on economic development in the world's 46 least developed countries. With its capital mandates and instruments, UNCDF offers last-mile finance models that unlock public and private resources, especially at the domestic level. Over the past 25 years, UNCDF has led the thought leadership and implementation on financial inclusion within the UN, providing financial and technical assistance to more than 160 private sector partners. Many of the best-known banks in these markets, from Equity Bank in South Sudan to AMK Microfinance in Cambodia, have at one point in time been UNCDF partners. And over the past 10 years, our work has, of course, focused intensively on digitalization. The successful interventions in diverse markets have also deepened our conviction that to strengthen financial inclusion and resilience of the vulnerable segments, we must engage in the sectors within the real economy with which those segments engage and transact every day. UNCDF is organized in 3 practice areas. LTF practice is a center of excellence and innovative fund for local government finance and local economic development finance in the world's 46 LDCs. It shows how localized investments through fiscal decentralization, municipal finance, and structured project finance can drive public and private funding. To the inclusive digital economies practice area, UNCDF recognizes that reaching the full potential of digital financial inclusion in support of the Sustainable Development Goals aligns with the vision of promoting digital economies that leave no one behind. UNCDF's vision through IDE is to empower millions of people by 2024 to use services daily that leverage innovation and technology and contribute to the Sustainable Development Goals. UNCDF applies a market development approach and continuously seeks to address underlying market dysfunctions to make that vision a reality. The LDCIP, this developed countries investment platform, provides seed funding in the form of loans or guarantees to investments in LDCs that are deemed too small or too risky by traditional investors. This contributes to the risk and prime the fund for domestic and foreign investors to participate in local initiatives. The migration and remittances effort of UNCDF are hosted within the Inclusive Digital Economies Practice Area. The migrant segment, which is the focus of our webinar today, plays a very important role. We learn within these segments about how remittances and related financial services have the potential to create a positive impact for tens of millions of people, especially when we consider the cascading effects of financial services to not just migrants and their families, but through them within their communities. UNCDF's focus is on ensuring that constraints around access, usage, and resilience for migrants are acknowledged and addressed. Some questions that we address. How do we ensure that migrants have access to affordable and fast digital remittance services that take transparency and consumer protection principles into account? But access does not guarantee usage. So how do we make it worthwhile for migrants and their families to choose digital alternatives instead of cash? How do we develop the right incentives for migrants and for other market participants to sustain end-to-end digitization? Finally, how do we ensure that the last mile delivery channels developed by the remittance service providers over decades can not only be used to move small value transfers from point A to B, but also to offer migrant-centric financial products and services that can eventually expand financial inclusion and resilience of migrants and their families. All this questioning leads us to the focus of our webinar today. The Inclusive Innovation Framework of UNCDF is an approach to solve the challenge ecosystems face when it comes to innovation. The lack of clarity about which migrant-centric innovations are viable for the markets. In other words, which digital innovations are accessible, affordable, and contribute to the financial resilience of migrants and their families. Let us be clear. Inclusive innovation is not just about developing an app. It's not just about using technology to drive down costs so as to reach the bottom of the pyramid market, although those things are, of course, important. Inclusive innovation, from UNCDF's perspective, means taking an ecosystem approach. Economies are digitizing all over the world, but technology in and of itself is neutral. The digitization of the world's economies can serve to make those economies more inclusive. And it can be a force for making economic inequalities even wider than they are right now by making business as usual ever faster and more efficient. That goal requires us, as I said, to take a 360-degree ecosystem approach to our work. In the case of migrant remittances, it means working with policymakers and regulators to think through and implement enabling frameworks for migrant remittances on both the send and receive side. It means working with remittance service providers to reimagine remittances completely. And it means working with migrants themselves to truly understand and deliver what they value in financial services. In response to the challenge of getting clarity on migrant-centric innovations in Bangladesh, UNCDF is proud to announce the release of the Bangladesh Inclusive Innovation Assessment Report, which represents a solid contribution to the challenge described. It is the result of a methodology for positioning and prioritizing interventions at multiple levels of remittance ecosystems to improve the migrant centricity of innovations. At the product and institutional level, it identifies opportunities for remittance service providers to improve their products and service offerings. At an ecosystem level, It identifies ecosystem-level enablers and inhibitors that can accelerate or hinder migrant-centric innovation. And finally, it proposes recommendations to various stakeholders to create a favorable ecosystem for migrant-centric innovation. For those who have not yet discovered the report, you may follow the link that is provided to you on the chat. The content and discussion of our webinar today are largely based on insights coming from the Bangladesh Inclusive Innovation Assessment Report and on the perception of key stakeholders of the Bangladesh remittance ecosystem. It is UNCDF's hope that the insights and discussions shared today will trigger and nudge the stakeholders to contribute individually and collectively to a Bangladesh remittance ecosystem, where inclusive innovation is brought to reality and allows increase of remittances and the use of financial services by migrants in Bangladesh. With that, I would like to open the floor to Mrs. Mukherjee, who is UNCDF's financial sector specialist dedicated to remittances in Bangladesh.
Thank you, Serge. And it's a pleasure to present, especially with the distinguished panelists here and guests who have covered most of the things that I was supposed to say, but let us dive deeper into the country assessment report and try to put up shape into what UNCDF feels are priorities. So the importance of migration and remittance in Bangladesh can hardly be overemphasized. With nearly 7.5 million migrants, 1 out of every 25 citizens in the country is a migrant worker. The remittance sent by this migrant worker contributes 5.1% of the GDP. The flow of remittance of Bangladesh has been increasing steadily over the years. The growth of remittance, as highlighted by the Honorable Secretary, is in fact outpaced the growth of migration from this country. While migrant growth is around 1.6%, remittance growth steadily has been over 6%. Although women migrants earlier were mostly non-worker family members, we have seen a growth of women migrant workers in Bangladesh. 1 out of every 3 migrant workers from Bangladesh are women. However, less than 3% of remittance senders are to Bangladesh are women, an issue we will highlight in a while. On the receiving side, however, majority of the receivers are women, which highlights the importance of gender-responsive remittance and financial services for the migrant families. Another interesting fact is the growth of remittance in the last 3 years in Bangladesh. Defying global predictions, remittance to Bangladesh has actually been increasing since COVID-19 pandemic, largely due to shifting of informal remittances in favor of formal remittance. While policy-level initiatives are important contributors to this impact, this also creates a unique opportunity to focus more on formal financial services, resilience, and inclusion of migrants and their families, leveraging the formalization of remittances. As part of the country assessment, UNCDF team and our partner Husker Ventures have consulted a wide array of institutions to gain insights on the market. It is also important to note here that the country assessment has significantly leveraged the existing literature, research studies, and policy notes by the public sector, multilaterals, and experts from public and private sector to gain insights into this. I would sincerely request the audience to refer to the bibliography section of the country assessment report to understand the source of the insights, informations as cited as part of the presentation today, and also the country assessment document. Now, while there is no denying that Bangladesh is on a promising trajectory from an inclusive innovation standpoint to deliver migrant financial services, we would like to highlight the importance of gender mainstreaming of sector, the need to focus on innovation in product and delivery channels, responding to men and women migrants and their families, and priorities to focus on development of the market. While the country assessment details the need, context, and insights into the development and inclusive innovation for migrant financial services, let me highlight 5 key focus areas that has been identified. Now, before the COVID-19 pandemic, an estimated 22 to 40% of remittances received in Bangladesh were informal. The value proposition of informal channels, as has been highlighted already, is linked to the ease of access, pricing consideration, especially in favorable forex rates, and a lack of awareness of the benefits of formal channels. In addition, the lower usage of informal channels is also correlated with the availability of formal banking networks for migrant families. In the last few years, interestingly, during the pandemic period, the remittance inflows to Bangladesh have increased by more than 18%, defying the global prediction of a downturn. In 2020, as has been highlighted again, the increase in remittance to Bangladesh has been 41% above the predicted decline. The experts estimate that this has happened largely due to a shift from informal to formal remittances, which is boosted by, of course, the 2% cash incentive by the government, which has now been become 2.5% cash incentive, drying up of the informal channels due to travel restrictions, cancellation of Hajj pilgrimage, and the floods. The private sector, interestingly, has also responded to this identified opportunity, especially since mobile financial service providers were allowed to process inward remittances in 2020. They have innovated on this. For example, bKash, a leading mobile financial service provider, has started offering a 1% cash bonus to customers receiving over 10,000 taka remittance. This has resulted, for example, in a 150% increase in daily remittance volume in bKash itself. It is worthwhile to mention that mobile financial service users in this period have also increased by more than 20 million, with the most significant increase seen in rural areas, strengthening the inclusivity of digital channels. In the same period, internet banking customers have also increased from 0.6 million, that is 600,000, to 2.74 million within June 2029 to June 2020. Second, until 2021, only banks with corresponding exchange houses are allowed to process inflow remittance. Since Bangladesh Bank has allowed MFS service providers to receive remittances, the regulatory shift has allowed remittance to be received through mobile wallets routed through corresponding banks. Currently, 26 MFIs, branches of post offices, are also authorized to distribute inflowing remittances. These initiatives have definitely helped improve the trend of digital remittances in Bangladesh. It is worthwhile to mention here that by digital remittance, we are referring here to all the inward remittances that terminates into a bank account or a mobile financial service wallets. Overall, digital remittance has seen a sharp increase in recent years, with the share of digital remittance increase from 11% in 2016 to over 24% in 2021. Over 70% of remittances received in rural areas now are received in agent banking or MFS wallets. However, as compared to other channels, digital wallets have remained underused and for smaller transaction sizes, likely due to their relatively higher transaction cost. Since wallet transfers are instantaneous, involves no lag, stakeholders interviewed for this assessment believe that these transfers are largely used for emergency transfers of remittances rather than regular remittance. Data from a leading bank that has been assessed by UNCDF shows that average remittance amount sent through OTC, that is cash channel, is around $600. Average amount sent through a bank account is around $700. However, the average amount transferred to wallet is only $102. This discrepancy might be linked to digital wallet providers charging a 1.5 to 2% on the sent amount during cash out, which is higher than the average price. Now, it is important to note here that given the cost of remittance to Bangladesh is already low at an average cost of 2.8%, any additional cost in accessing the same or a little change in forex becomes significant decision driver for the migrants. Growth in agent banking in Bangladesh is impressive. As of June 2022, 86% of agent outlets and accounts open are in rural areas. And over 10% quarterly growth in deposit, savings, and inflowing remittances through agent banking outpaces the growth of agent outlets. This demonstrates a high degree of trust amongst customers with their agents. Utilizing agent can also be more cost-effective than the MFS wallet providers, since cash out at this agent location is cost-free. However, there is a significant gender gap observed in agent banking operations. While the gender gap in deposits is 23%, the gender gap in lending is as high as 70%. The growth of lending and deposit through agent banking to women customers also falls significantly behind their male counterparts. Studies have found that risks and challenges associated with agent behavior are important, some of which are users sometimes find agent knowledge or explanation of product as being insufficient, often because agents are interested in maintaining the dependence of the users on them and rather not make them independent. There are also gendered challenges, with some agents treating women customers with condescension and bias. Reports also indicate instances of women facing harassment at the outlets and by the agents. In addition, customers have also reported complaints of fraud relating to identification, that is PIN numbers, misuse, cash misappropriation, and other issues. Finally, having a vast agent network does not necessarily translate into good services. Both the cost of migration from Bangladesh is among the highest in South Asia at an average $4,600. According to the latest report by Bangladesh Bureau of Statistics, it takes migrants around 17 months to recoup the cost of migration to their job. Typically, most Bangladeshi migrants resort to loans or mortgages to finance such migration. Thus, the first 2 to 3 years of wage earned are focused on paying off debts from these borrowers. 85% of these loans are still from families and moneylenders in absence of formal options. The country, described as the land of MSME finance, forms a conducive environment for providing innovative, socially focused loan products for the migrants. Probashi Kalyan Bank, Agrani Bank, and some private sector banks have already been providing loan products to the migrants at a specially designed mechanism. Some MFIs like BRAC has been also offering remittance-linked or migration-focused loans. Savings is also important for the migrants, and some of the banks and financial institutions have been providing specialized high interest rate or specialized interest rate, fixed deposit, and other EMI-based products. Bangladesh is also unique in having specific mandatory insurance cover for the migrants, outgoing migrants. So far, through the Wage Earners Welfare Boards and Ministry of Expatriate Welfare's insurance product, about 1.3 million migrants have been covered through these policies. However, there is still scope of improving on these products and innovating on delivery channels, increasing outreach and effectivity of these products. Lastly, a survey of over 100 startup founders in Bangladesh in 2019 has highlighted that fintech is the most promising of the sectors for entrepreneurship, with a high confidence level in the overall startup ecosystem. The current startup ecosystem in Bangladesh has seen over 200 million of investment, and fintech has been one of the top 3 thematic areas for this. While the MTOs, the MNOs, and fintechs in Bangladesh are focused on innovation, it is believed that the banks are more conservative in their approach towards innovation. Banks, which has been consulted as part of this assessment, highlights that there is limited knowledge at the bank's level on the sending side of the migrants, their demographies, their needs, their pains. So there is a need for and aspirations. So there is definitely a need for innovation and research and understanding the migrant needs. Now, with this key highlights in focus, let us also list down a few of the priority areas to work on. First of all, at the product level, given limited financial and technical capacities of the remittance service providers and financial service providers, there's a need for driving product uptake, providing engagement-linked investment in the private sector for innovative and inclusive migrant-centric, gender-responsive savings, credit, and insurance product, and also providing them with technical and capacity building support. Given the gender gap in digital remittance channels and lack of understanding at the RSPs around the need and preference of the migrants, there is a need to build institutional capacity through conducting market studies on the sending side of the major corridors, conducting supply and demand side research on gender responsiveness of agent banking and MFS operations, and increase the share of women agents in agent banking. At an institutional level, we need to probably kickstart a financial service-focused innovation, supporting the creation of a scalable and commercially viable financial resilience ecosystem in Bangladesh through policy and regulatory analysis and sector-level dialogues. Given the limited capacity of the financial service providers on financial literacy and data-driven decision-making, incentivizing investment on research and development of RSPs is also important. Strengthening their capacity of the private sector on inclusion, business innovation, financial literacy through the uptake of digital financial literacy tools, customization of the human-centric design, and gender-smart product development tools are important. Providing data collection and analytics support to RSPs to build research and innovation capacity with a focus on catering to the needs and preference of women recipient migrants, family members is also important. And finally, at an ecosystem level, given the scope of creating a shared market infrastructure through NID, Smart NID and eKYC, we need to explore possibilities to utilize digital NID and eKYC to offer innovative remittance and linked financial services. We can also think of supporting wallet interoperability, that is MFS interoperability through policy level engagements. And last but not the least, expand the scope of remittance service provision by exploring non-bank remittance providers like MTOs, RSPs, and other fintech providers to deliver remittance services independently. Now, let's stop at that and open the floor for question and answer. We'll have a brief 5 minutes question answer, and after that, we will go to the panel members.
We have a question. Yeah, premises, we have a question for Dr. Salehin about the reasons for the growth in remittances in Bangladesh since COVID.
Dr. Salehin. Dr. Salehin, if you can hear, if you're speaking, you're I think on mute.
Or you may feel free to answer, premises. Yeah.
Yeah. So one of the primary reason that has been cited, and there is enough research that needs to be done still, is that a lot of informal remittances have shifted to formal remittance, and largely due to the government incentives and other. Dr. Salehin is back. I think if you can respond to this question, Dr. Salehin.
So
Dr. Salehin, again on mute.
Yes. Do you hear me?
No, sorry. If you can repeat, please. You're again on mute, Dr. Salehin.
Okay.
Yes, now we can hear you. Yes, yes.
Could you please repeat the question?
The question is, Dr. Salehin, is what are probably the reasons for increasing of remittances to Bangladesh during COVID-19?
Okay. In fact, I said it that this is a puzzling questions to a lot of activists, a lot of social scientists and economists, that why remittances increased to the extent that it increased. In fact, I have also mentioned in my inaugural speech that there are multifarious factors. And one of them is that it is a general trend that in the crisis moment, remitters tend to send their remittances to the beneficiaries at home. This is one reason. So COVID was a very critical time. So they tend to send more remittances. But what I think is most important is the restriction on human mobility. And that is what compelled the migrant workers to adopt the formal channels instead of going for the illegal ones, which you have mentioned in your presentation, and there are different studies on these issues as well, that it is used quite widely. I mean, the illegal channel. So during the COVID period, people could not use the illegal channel. So this could be one of the reasons. So again, to put it in a different way, when people tend to use the formal channel, the remittance will automatically grow up. And coupled with this is that right after the COVID period, migration or the flow of overseas employment increased. That is also has some impact following sort of post-COVID period. We are yet to reap the benefit of this phenomenon, but we hope that remittance inflow will further increase as we will start reaping the benefits of increased migration.
Thank you, Dr. Salim.
Okay, thank you.
There's a question from on how the actors focus on and provide financial literacy, which is very important for remittance recipients. I think the financial literacy design, there has been a lot of initiatives on financial literacy design and delivery already. However, we need to look at scalable financial literacy delivery models, digital financial literacy delivery models, which need to be integrated within the financial service provider system through leveraging some of the technologies that are already available. So the scope of this presentation is probably too small, or this webinar is too small to discuss in detail about the approach, but suffice to say that at UNCDF, we believe that digital mode of delivery of financial literacy is important, which needs to be integrated into the financial service providers system and platforms.
No, Mr.
There's a
Premasi,
question.
do you expect any? Okay, so again, this is another challenge that most of our workers are not skilled and they are not literate enough to become aware of financial literacy. But what we are trying to do is this, that we have pre-departure orientation for the potential migrant workers. Each and everybody who goes abroad has to undergo a training program, an orientation program for 3 days. And we try to provide them some idea of financial literacy, that how they should make their account, how they should remit their hard-earned money, etc. At the same time, we are working in collaboration with different stakeholders, such as International Labour Organization, International Organization for Migration, and other local NGOs and other international NGOs, in order to make people aware about the financial literacy. So this is a continuous process. We are trying to do it more seriously than ever before, because of the, as you have mentioned in your presentation, that mobile financial services and other banking services, as in banking, all these have become available to our workers and their families. So it is important that they are made aware of it in the first place, and then they are motivated to use it for their own benefit. So that is what the government of Bangladesh is trying to do. Especially migrant workers are being made aware both at home as well as in destination countries. Our distinguished participants might be aware of the fact that Bangladesh has got some 29 missions in 27 countries where it operates a welfare wing, and which is particularly meant for providing services, legal assistance, and at the same time promotion of overseas employment in the destination countries. They are also trying to make those people aware about different legal channels, about how to make the best use of their money, how to remit money to the legal channel, and at the same time make the banking services popular to them. So we are working on it, and we hope that things in days ahead, things will be much better than what it is now. And we are working also in collaboration with different international agencies, and we have talked to UNCDF how they can help us in making some more innovative approaches in order to address this problem of lack of financial literacy among the migrant workers.
Dr. Sullivan, thank you. In the interest of time, we will move ahead, but before it's a very interesting question. We would like to come back to the other questions later after the panel member, but this question is too enticing and I'm eager to ask you. Someone has asked, like, the developed countries are arguably soon going to face recession. How the Bangladeshi remittances do you think will be affected, and what needs to be done to minimize the possible threat? If any thoughts on that?
Okay, I think, yes, with the passage of time, with the recession, economic recession, there are some outlook which is not very shiny or very positive. But I think that Bangladesh is now more oriented, more focused on sending skilled workers. Instead of sending the unskilled or so-called semi-skilled workers, we are trying to make sure that migration or work migration is more skilled, more quality migration takes place. So, though despite the fact that developed countries will face some economic recession, and there are some other considerations like different other factors. Let me tell about the phenomenon in Saudi Arabia, which is the biggest destination country for Bangladesh. That they have their own policy. I am sure that many of you are familiar with Saudization and some other internal policies which are going to restrict the recruitment of low-skilled workers. But at the same time, given that Bangladesh has got the demographic dividend, or endowed with the demographic dividend, and we are trying to upskill our people, and we are attaching a lot of importance to the skill development, and we are trying to ensure that more and more skilled people go abroad. So at the end of the day, I think the remittance is not going to seriously have that kind of impact in near future, at least. So I think that, yes, as Bangladesh is also trying to graduate from a low-income country to a middle-income country and finally to a developed country, maybe in course of time, our focus on poisonous remittance will also shift from this area to some other area. Maybe we will have to have more foreign exchanges through the export rather than through remittances. So I don't think that remittance will remain the main source of foreign remittances, or poisonous remittance will not be the main foreign exchange reserve contributor in future, in long future. But for the near future, it's not going to affect Bangladesh remittance to a great extent. That is what I think.
Thank you, Dr. Salehin. That's with that encouraging and inspiring note. We will go to the panel discussion. We had Bangladesh Bank's Mr. Humayun Kabir, Executive Director, also supposed to join, but unfortunately he has fallen sick after a long travel, so he couldn't join. He has expressed his regret today morning. But we would go to first Mr. Sabir Hussain and then Dr. Amina Raihan. Sabir Hussain is Deputy Managing Director and Chief Operating Officer of BRAC Bank Limited. So he would be talking about the bank's perspective on remittance and financial services. Over to you, Sabir Bhai.
Thank you, Premashish. Good afternoon, everybody. At the very onset, I must thank UNCDF for organizing a webinar on such an important topic. It's a great honor for me to participate in this webinar, particularly with such a distinguished guest.
Sabir Bhai, you went on mute for some reason.
I'm sorry. Did you hear,
you
at
now.
the beginning, or should I start?
Okay. We can hear you now.
Okay. So it's a great honor for me to participate in this webinar. We at BRAC Bank have had the opportunity to work with UNCDF to improve Bangladeshi remittance recipients' access to digital channels and to strengthen the use of remittance-linked value-added services. Our partnership with UNCDF produced a case study titled Shifting from Cash to Digital Remittance During the Pandemic, a case study of BRAC Bank in Bangladesh. The study sheds light on how digital services becomes financially inclusive and socioeconomically empowering. The case study insights further inspire us to drive more digitalization in our bank. I think it is timely initiative of UNCDF to promote, innovate, and endorse digital remittance. The remarkable growth of digital remittance during the pandemic speaks of the immense potential digital remittances hold in Bangladesh. Wage remittance is vital for Bangladesh's economic growth and national development, we all know. If we look at the numbers, in fact, we have discussed the numbers in the earlier sessions, but still, we see the magnitude of remittance and its massive impact on people and the country itself. More than 10 million Bangladeshi migrant workers are living abroad. They remit about USD 22 billion a year, in fact, it's a number, making Bangladesh the world's 8th largest remittance recipient country. As Bangladesh sets sight to graduate to middle-income country within this decade, and a developed country by 2041, remittance will be a vital contributor for this development journey. We saw the strength of remittance is vital for Bangladesh's economic growth and national development. If we look at the numbers, we see the magnitude of massive impact on the people and the country itself. As Bangladesh sets sight to graduate into the middle-income country within the decade and the developed country in 2041, remittance's importance is very vital, as you said. In fact, I repeated, I'm sorry. We saw the strength of resilience of Bangladesh wage earners during the pandemic period. While remittance to low and middle income countries worldwide did fall by 1.6% in 2020, the opposite effect occurred in Bangladesh, where inbound remittances increased by 18% as per UNCDF study. Coming back to BRAC Bank's stride in digital remittance space, the bank has embarked on a digital transformation journey as one of the early movers in Bangladesh banking industry. The bank has invested heavily to build a state-of-the-art technology backbone that can support the full-scale digitalization of our service delivery channels, internal processes, and systems. It has completed API integration with prominent mobile financial service providers, exchange houses, to provide smooth remittance service. For the remittance beneficiaries, our mobile app Astha in Bangla, we call it trust, provide seamless transfer facilities and saving scope. The users can actually open FD and DPS through Astha as well seamlessly. Let us give you an example. In the first quarter 2018, 75% of BRAC Bank's total number of remittance transactions were executed in cash. While in the last quarter of 2021, only 25% of these remittance transactions were cash. Rest 75% was all digital. Now, facilities such as low cost, no service charges in direct account credit, competitive exchange rates, and real-time transfer with no human intervention attract migrants to switch to digital payment services. BRAC Bank has worked tirelessly to build a network of more than 65 remittance partners worldwide. We are developing partnership with new generation money transfer operators and fintech-based exchange houses with strong digital distribution capabilities. We have the technological capability and vast network to deliver remittance directly and instantly in any part of the country. Our in-house remittance application, mRemit, is directly connected to the payment systems of all the partners worldwide to facilitate real-time transactions. Our subsidiary bKash has revolutionized the remittance delivery system with instant credit to mobile wallet. It gives the recipient the freedom to withdraw money anytime at 200,000 agent locations and 375 ATMs of BRAC Bank. Our agent banking channel has also contributed in this journey in the recent months. We also have remittance services for freelancers. We have launched the country's first ever freelance metrics account. BRAC Bank and bKash are also facilitating to bring overseas payments of the freelancers through Payoneer in real time. BRAC Bank has always been at the forefront of technological innovation in the banking industry, with the vision of taking banking to the unbanked missing middle. The bank continuously strives to use technology to reach out to more people and cover more areas. As the ending note, I would like to emphasize our partnership with UNCDF. Would like to continue collaborating with UNCDF in digital remittance and financial services to take our services to the next level. I can assure you we will leave no stones unturned to provide world-class services to our valued customers in remittance and financial services. That's the promise from BRAC Bank to our valued customers and stakeholders. Thank you.
Thank you, Mr. Sabir Hussain. We will switch to our next panelist, Dr. Anand Raihan, who is Chief Executive Officer of iSocial Limited. Dr. Raihan, over to you.
Hello. Can you hear me?
Yes, yes, we hear you.
Thank you. I actually missed the last part of the presentation of Sabir Bhai. So first of all, thank you for inviting me to this a very auspicious moment when UNCDF launched the country assessment report connected to remittance services. And it's my privilege. I'd like to touch upon a few things. I think the report actually would open eyes to many of the stakeholders in the ecosystem, both enablers, the market players like Bragg Bank and other banks and financial institutions, and of course, the fintech industry. As you've mentioned that the fintech industry is getting a lot of traction from the investors as well. I believe that it will have a change-making journey ahead of us. I had the opportunity to work with the Ministry of Expatriate Welfare and Overseas Employment when they requested me to give some idea about new products, financial products. So I submitted that report, and I heard that Ministry has taken initiative to, take at least 2 ideas forward. And I think UNCDF can play a very important role in facilitating Ministry to connect with the private sector. And this report would really help all of the stakeholders in this regard. I'll touch upon on the remittance part first. There are multiple ways how we can increase the revenue inflow through formal channel, exchange rate management, then the legalistic way by preventing sending through hundi. But hundi is a very difficult, system like octopus spread across the globe. And the countries are connected, so it's difficult to eliminate hundi. But one thing mentioned in this report, which is very important, that if we can make the services available at the mobile phone of the expats, the smartphone, then I believe that the remittance flow can increase manifold. And Bangladesh needs remittance more than ever, given that the export forecasts are not very promising. However, as the flow of expat workers is increasing steadily, so I think focusing on how we can bring remittance through formal channel using the digital technology, I think can be one of the major agenda, and in UNCDF and Ministry together can work. And I believe that inviting the private sector would be very important in this regard. For example, insurance is now mandatory, but it is being provided only through Jiban Bima. It's a state insurance agency. I would like to suggest to think about why not to invite other insurance companies who might be also interested to be part of this insurance market, and the insurance service can make the workers' life better. Currently, the focus on only on the the claim against the death of the migrant workers, but it can be extended to other important areas, especially hospitalization in the destination country, the legal support, and maternity benefits. The Indian similar remittance program includes these 3 components. I believe that the insurance companies, the fintech, they can work together, and UNCDF can support them with sandbox environment for experimenting this kind of, new initiatives. The report mentioned about the gender lens, and there's a huge gap, and it showed that only 1% of the agents are women. So there is one aspect of it that supply side can be increased further, and iSocial worked with the UNCDF to engage the women micro merchants. That showed the way. I think it can be extended further. But moreover, you see that if there's more than 10 million workers went abroad in last 25 years, that means there is 10 million families where most of the cases women have been with the charge of running the family. And that is I'd say a market which is, I'd say, untapped. And that's why And that is one part. And when 1 million, say, workers are going to abroad this year, and you'll see, and it was mentioned in the report that most of them got access to finance through informal channels. And again, it's an untapped market. So the report mentions about these opportunities. I expect a little more actually from it, that not only the opportunities, but specific framework of some certain programs where the relevant stakeholders can play their role, and immediately, so that some of the things can be initiated. I know that UNCDF launched a innovation challenge program, and I believe a lot of ideas have been submitted to them. But even beyond those structured program, I believe that segment-wise further brainstorming would be helpful. For example, how to make the insurance service available to the workers when they're abroad, how they can pay the premium. If it is not one-time premium, because more insurance services can come, how they can pay sitting abroad and maintaining the insurance program operational. Then the credit. It's not only access to credit when they're departing from the country, but also access to credit when they're in the destination countries. And now Bangladesh government has given emphasis on the repatriation and reintegration, and there is multiple programs underway. I think we can follow the Filipino example, where the returnee migrants can be involved in entrepreneurship, and there is a holistic program provided in Philippines, which can be also replicated in Bangladeshi environment, and the financial institutions can come forward. So I believe that this report would be a foundation of the breakthrough in the remittance sector, and the not only remittance sector. I think it is probably narrowing down the scope. I would say the financial services sector targeted towards the expatriate workers and their families, and in the whole value chain, not only when the aspirant migrants, then the migrants in the destination countries, and when they're coming back. So we can target all these segments, and I believe that the market is very big. I have an estimate that $10 trillion can be, leveraged through this, providing more services to the expatriates. So thank you again for inviting me to this event of launching. Over to you.
Thank you, Dr. Raihan, for the encouraging words and also the great presentation, giving an overview of the market. UNCDF is, of course, open to dialogues with stakeholders in the country through such events of webinars and workshops, and the request for applications when deploying funding and technical assistance. We're open to listening to an accommodated view of the stakeholders who might be included specifically in this, who couldn't be included specifically for this time-bound exercise, especially such significant additive information and insights. And we're looking forward to work with the ecosystem players and the policymakers and the ministries, as well as private sector, towards fulfilling some of these visions that has been enlisted. Now, in the interest of time, we couldn't probably address all the questions that has been asked, but we would make an effort to come back to all the questions in due course of time. However, I'm eager to ask, starting from Mr. Sabir Hussain, one of the things that has been identified in the report is that mobile financial services and agent banking are becoming important channels for delivering inward remittances, especially since COVID-19 pandemic, those channels have been increasing. However, we have also seen that the size of remittance processed through, especially mobile banking, like MFS services, significantly lower than the cash channel and the account-based channels. So from a bank's perspective, how do you think the scenario may be altered so that remitters and receivers perceive these channels, especially the mobile financial service channels, in the same manner as the bank accounts and the cash channel? So any response to this?
Yeah, thank you, Dada, for asking me this. Actually, I think we have to focus on 3 areas. greater awareness is definitely one. I'll tell you why. Bikash transaction limits or mobile financial system transaction limits were low, not in the very distant past, but very recent past. It was 25-30,000 taka you could send or receive on those wallets from the bank to Bikash and Bikash to bank. So those numbers have changed in the recent past. In fact, increased to 50,000 taka on both counts. Now, how many people know? So if people are either home or abroad, if they have the previous memory, in that case, they will only send less. That's number one. Number two is like curbing informal channel is definitely an activity, and we'll have to constantly do that. Not only at home, but also engaging various other bodies abroad in various other countries in various ways. Payment through wallet is the only other thing, and that can be a separate initiative as well. Like when we can use this deposit in the wallet for payments, in that case, this transaction cost doesn't hurt you anymore. So in neighboring country in India, the way we see it has grown with various initiatives in recent years, we are probably not far away from seeing such a growth and volume. So when our recipients would find good and greater use of these remittance in their wallets, it will continue to stick and grow. But at the same time, MFS will see greater or increased growth, no doubt, due to the conveniences. But at the same time, there are subtle differences in these two channels. So it will not be equal. So you would find still in the banking channel, probably it will grow. It will be carrying a greater share compared to the MFS, but both of them will be growing. And then again, I would say we will see interchangeable use of this, and one will complement the other. So in the combination of these two will complete the ecosystem, I would say. Over to you, sir.
Thank you, Sabir Bhai. Great. And in the interest of time, we'll just have one question. And this is specifically to Dr. Raihan. The venture capital and startup ecosystem in Bangladesh has been growing steadily. However, during the stakeholder interviews as part of this country session, we came across opinions that conventional banks and financial service providers are probably not yet focused much on innovative products and services, especially for migrants. Now, what in your view are some of the ways to nudge a more innovative migrant financial market?
I think it's an excellent question, because as you have mentioned when you presented the findings of the report, that the startup ecosystem is growing and the government is investing further so that there is steady pipeline, and the startup ecosystem generates more innovation and also create employment. It's very important for us. And we see that the pie of the investment so far came. It is more than $800 million now, and there are multiple VCs who are waiting to come to Bangladesh and invest. One of the barriers is that the incorporation, entry and exit regulation of the investors, especially the exit, is not very clear, very clumsy. And for that reason, most of the startups are incorporating abroad, like Singapore, UK, or US, Delaware, to avoid this legal complexity. So I think there are multiple initiatives, I know, but we need to probably move faster so that more big investment can come to Bangladesh directly, not through third country. And then I think the amount of investment required for innovations in fintech will be, somehow covered. And that is one aspect. The second aspect is the regulatory sandbox. It is there. Bangladesh Bank is playing very important role in allowing the fintech companies But again, this is not systematic, rather persuasive. I mean, if you can convince and then you can get sandbox permission or approval. So I think it should be systematic so that any fintech company, along with the banking institution, can try something new. Then it will be easier, because not for many young innovators, it is possible to meet the Bangladesh Bank governor or any senior Bangladesh Bank officials. I think this is one of the major barriers, I think, in the fintech space. The third one is the interest of the banks. I would say, if you compare now and 5 years back, many of the banks are now realizing that traditional banking is going to die. We have to go to the digital space. So some banks are faster and some banks are slow, but the overall trend is that everybody is embracing digital banking and digital financing. So again, we need to support the banks as well. For example, when you offer credit to, special group like women, so on, then you provide credit guarantee scheme. So why not to allocate some funding which will guarantee of any loss of experiment, and the development partners can come here and blended financing can be applied here. So I think this kind of initiatives could foster the innovations in fintech, and the financial industry can go faster than now. Thank you.
Thank you, Dr. Rahan. Thank you both, Mrs. Abir Hussain and Dr. Rahan, for the interesting presentation. And with we are coming to the end of our timing as well as the agenda. So I'll ask Mr. Serge to give the concluding remarks to this presentation. Over to you, Serge.
Thank you very much, Premises. Distinguished participants, ladies and gentlemen, UNCDF is very grateful for your active participation. We think the level of interest and interactions during the webinar are a true reflection of the opportunity at hand to further transform the leverage remittance ecosystem. It is our sincere hope that this webinar has raised even more your interest for inclusive innovation and its potential to increase formal remittances and the use of financial services by migrants in Bangladesh. The vision of inclusive digital economies supporting migrants and beneficiaries towards economic inclusion, financial health, and reduced inequality can only be a reality in the country if the stakeholders are equipped and understand the opportunities. The Inclusive Innovation Country Assessment Report is envisioned as a resource to nudge the actions of the stakeholders towards goals that are inclusive of the needs of the most vulnerable, but also of the business and regulatory realities. It is the ambition of UNCDF that these stakeholders will freely use the content of the country assessment to tailor their approaches to innovation and to accelerate inclusive innovation in the country. Building on this innovation, UNCDF is preparing a country-specific strategy that will clarify on which recommendations it will actively focus on in the coming year. That will open collaboration with stakeholders from private and public sector. UNCDF will publish requests for applications, which will be the main channel of selection of partner institutions from the private sector to pave the way for working at the institution and at the product level. The public sector stakeholders are encouraged to reach out to UNCDF directly. The approach with them will consist in establishing partnerships associations that will set the framework for the provision of technical assistance by UNCDF. I will not conclude my closing remarks without presenting special thanks to the Swiss Agency for Development and Cooperation. The efforts of UNCDF on migration and remittance to address the challenges of current remittance markets that do not necessarily work for people on the move are generously supported by the SDC. Without their support, This inclusive innovation framework and related efforts towards inclusive innovation in Bangladesh would not have been possible. We would like to thank also the Ministry of Expatriates Welfare and Overseas Employment for the participation and insights. We look forward to work with you and the relevant ministries, of course, in Bangladesh towards the observations of the Inclusive Innovation Assessment Report and to the Bangladesh Bank that unfortunately could not join today for the insights and support about the market. So again, thank you all to all the panelists for your valuable contributions. And thank you to the audience for the quality of the questions. We will share the recording and the materials with all the participants in the coming day. Thank you again and have a good day.